You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome back, everyone. Today, we're kind of peeling back the layers on the tech startup scene, focusing on founders. It's an intense world out there.
It really is. We've gathered some observations on, market shifts, leadership pressures, big strategic choices.
The aim is to give you a quick sense of what's really, moving the needle right now.
Exactly. So where should we start? The market's been lively.
Yeah, let's kick off there. The big news is tech IPOs seem to be back. After a long, quiet spell, we saw bullish Peter Thiel's company just surge 84% on its first day. Incredible.
Wow, 84%.
In Figma, Circle, they also saw pretty decent first-day gains. It almost feels like, the prohibition years might be ending for public tech.
It does feel that way, but jumps like that, they do make you wonder a bit. Is it sustainable? Is the pricing right? Reminds me slightly of the dot-com excitement.
That's a fair point. A little bit of caution needed, perhaps.
Yeah, and while the public market gets headlines, there's this quieter boom happening in the venture capital secondary market.
Oh, right. Tell us about that.
Well, it hit $152 billion in 2024. That's up 39% year over year. It's massive.
$152 billion.
Okay. Yeah. And it's become like essential infrastructure now. It's how LPs, the limited partners, sell their fund stakes.
Right.
It's how founders can get liquidity for their employees, cashing out some stock. And GPs, the fund managers, use these things called continuation vehicles.
To hold on to promising companies longer.
Exactly. It's basically how VC kind of works now for liquidity. It went from maybe 16% of deal activity back in 2020 to almost 29% in 2024.
That's a fundamental shift in the mechanics.
Right.
So less reliant purely on traditional funding rounds and IPOs for exits.
Seems that way. More flexibility, more ways to get cash out or restructure. Okay, so beyond the market numbers, let's talk about the people, the leaders.
Yeah, the human side. It's not always easy at the top. Look at Opendoor CEO Carrie Wheeler just resigned.
I saw that. Investor pressure, right?
Intense pressure. Apparently from folks like Eric Jackson, the hedge fund manager, and even co-founder Keith Rabois. The turnaround didn't quite stick.
Right, and the CTO stepped in as interim.
Yeah, Sri Radhakrishnan. And interestingly, the stock actually popped quite a bit after the announcement.
Huh. Shows how brutal that pressure can be.
Absolutely. And speaking of intensity, this example from Cognition CEO Scott Wu is pretty striking.
Oh, with the Windsurf acquisition?
Exactly.
Yeah.
He offered buyouts,
Yeah.
but was apparently very explicit about needing an extreme work culture. We're talking 80-plus hour weeks.
Wow.
Yeah. He basically said, if you stay, this is the level of commitment required. After laying off 30 people and speeding up vesting for some, it left about 200 workers with a really stark choice.
That definitely highlights the kind of all-in environment some startups demand. High stakes, high sacrifice.
So, okay, we've seen market shifts, leadership pressures. What about strategies for, actually building and growing?
Right. Let's pivot to that. Pricing is always a big one, especially now with AI features popping up everywhere.
Yeah, it adds complexity. I saw this great point from Kyle Hart at Toast. He built their pricing from nothing to $100 million ARR.
Oh, yeah. What was his take?
He said customers often say they want usage-based pricing, pay for what you use.
Makes sense on the surface.
But then they often really dislike the variable bills, the unpredictability.
Ah, okay. That rings true. So what did he suggest?
His approach was methodical. Audit your current features first, then actually test mock pricing pages in real sales calls. See the reaction.
Smart. Low-risk testing.
Exactly. Build your conviction slowly before you roll out big changes.
That's really practical advice, and it connects to a broader product idea. High-performing teams aren't just about adding stuff. They're really good at stopping stuff.
Stopping doing the wrong things. Sounds simple, but it's hard.
It's surprisingly hard. Like, are you constantly weaving context into discussions? Are you shipping meaningful progress weekly, not just getting stuck in endless planning?
Or just executing on plans made a year ago without questioning if they still make sense.
Precisely. So maybe ask yourself, you listening right now, what commitment or activity would you need to stop doing to free up space for real impact?
That's a challenging question for anyone. And thinking about impact, especially with AI, it feels like we're just scratching the surface of AI products.
Totally. The idea that product won't end at chat is key. AI models are way ahead of product design right now.
Like, we can stop developing the underlying AI today and still have years of work just designing good user experiences for it.
Pretty much. Chat interfaces are often, frankly, not great for complex workflows or remembering things over time or handling deep data.
So you expect an unbundling, like what happened with Craigslist.
Exactly. Those big horizontal chat platforms, they'll likely break down into more specialized, purpose-built AI applications. Think turning a complex guidebook or even a professional advisor role into its own standalone AI experience. Much deeper than just chat. Maybe something we'll cover more on Vocal Technologists sometime.
Fascinating. Lots of opportunity there.
Definitely. And maybe two quick tactical thoughts to leave people with. One, don't do things that could work. Do things that would be weird if they didn't work. Focus on high conviction bets.
I like that. Less hoping, more knowing.
Right. And the second is just remembering that core startup triangle: burn rate, growth rate, and valuation.
Ah, yes, the constant balancing act.
It's not just theory. Every investment, every strategic choice has to map back to that. How much cash are we burning? How fast are we growing? And does this justify the valuation we need for the next funding round? It's a continuous calculation.
What a landscape. We've covered quite a bit today, the market's ups and downs, the intense pressures on leaders, and some really critical choices around strategy, pricing, product.
It's definitely a demanding space.
No kidding. But also one with clearly huge potential if navigated well.
Absolutely. And maybe the final thought to leave you with is this. In such a fast-moving environment, maybe the most crucial skill isn't just figuring out the next thing to do. Perhaps it's developing the discipline to figure out what to stop doing.
Making space for genuine progress by letting go of the old or the ineffective.
Exactly. What ingrained habit, what old commitment might you need to seriously reevaluate right now? Something to think about.
Spoken Tech for your ears.